as we get closer to the Labor Department's all-important non-farm payroll report for June, which comes out on Friday of next week, it's worth getting a read on the employment situation from someone who's a little closer to the issue than the federal government. I'm talking about Paychex, and that's Payx, the second largest payroll processor in the United States, focusing on small and medium-sized businesses where most of the nation's hiring really does happen. They also have a human resources and benefits outsourcing division. They're on fire. Now, a lot of people view Paychex as being totally hostage to interest rates, which have been at very low levels, because in the time between when your employer transfers its payroll budget into Paychex's account and the moment when you actually cash your paychecks, this company collects interest in what's known as the float. But this morning, Paychex proved that it can do extremely well, even in a low interest rate environment, as the company just reported a pretty darn strong quarter before the open. That's right, while Paychex posted inline earnings, the company's revenue came in higher than expected, up 9% year over year, with payroll service revenue up 5%, human resource division very strong, 14%. The quarter was so good that it sent the stock soaring $3.36, or very nearly 6% today. In fact, Paychex has given us a terrific close to 12% gain since we last spoke to the CEO exactly 3 months ago. But even here, at its brand new 52-week high, the stock still sports a solid 2.8% dividend yield. So let's check in with Marty Musi. He's the president and CEO of Paychex, learn more about the quarter and get his take on the job market in this country. Mr. Musi, welcome back to Mad Money.
Thanks, Jim. Great to be here.
All right, Marty, this was your most robust quarter since we've been talking, and we've been talking for many, many years. What the heck happened? This was a dramatic acceleration in your business over a 3-month period. Was it the country's hiring, or was it something that you guys have been doing, or both?
Well, I think it's a little bit of both. I think, obviously, we had great sales execution, particularly in the quarter, but in our selling season at the first of the calendar year. And it's across all divisions, whether it's payroll or HR, outsourcing, 401k, all divisions are really hitting strong on the sales, and our client retention is at a record high. So, you know, almost hitting $3 billion in revenue is a new high for Paychex, and we're really excited about it.
Well, it does seem, we always try to figure out, well, which is which? Is it going to be the ticket that's growing or the average number of customers growing? It seemed like everything did go into high gear.
It really did. We had the highest net client growth that we've seen since the recession. And again, that's a combination of great sales and great client retention and service that we're giving the clients. We also are seeing that, and we've talked about it, the revenue per client really expanding. So with all of the products and the feature set that we offer and the need coming down in size, we're seeing more clients take more products.
It always seems, Marty, that the government just continues to give you what I would say is a leg up. They passed through, the president put through some overtime rules. Frankly, not a lot of people saw it coming, except for you guys. This kind of thing is the kind of thing that, how does anyone figure it out without Paychex?
Well, that's the hard part. You really need to be sure that you're tracking all that time, that you're paying the right rates, which can get very confusing. And of course, we've got a number of clocks. We actually have a mobile option now, too. You can punch in, punch out on your phone on the Paychex app. So you really need, you know, these regulations have not always been great for business, but they have been good for Paychex because we're able to help small businesses grow with all those issues.
Now, July is dividend season for you guys. I know it needs the board to check off on the dividend, but historically there's been a nice boost in the dividend. And even though you yield 2.8, which is much more than most, I imagine come July it'll be the subject again of something that could be good news for shareholders.
Well, certainly the board has been very consistent. It's their decision, but they're very consistent in trying to keep us in that, you know, low 80% kind of payout ratio. And we've been consistent with that last year, an 11% increase in last July when we saw that. And I think, you know, you would expect consistency from us, and we like having that high yield as well as that top line growth for our shareholders. All
right, Marty, what's going on? You've got a business that's very competitive, and it seems like you've offered all these cloud initiatives, and you spent a lot of money doing them, but now they're all in play. Are you starting to take share from a whole new group of players, like maybe some of the Silicon Valley guys that had a cloud offering that were attractive? Because you're not only just retaining, but you're winning a lot of new business.
Well, we are winning. I think, you know, having the great technology that we've invested in the last few years and a very personalized service methods for making sure our clients are served the way they want, I think we are taking some share. But there is new business growth coming in now. You know, we're back to almost that business, the new business startups that we saw pre-recession. And I think we're getting a better share of those new businesses as well as taking some share. I don't know if we're taking so much from the Silicon Valley type of software companies, but we're certainly taking from some of our competitors. And you're seeing more of a need, Jim, than ever before because of the regulations you talked about.
Well, last question, Marty. I do find that what you're saying doesn't jive with the kind of general climate. I mean, you just don't get this kind of growth that you're having unless things are a little better in the country than people, let's say, hear in the media. Is that fair?
Yeah. Well, I think, our small business index, while we put out on a monthly basis, it dropped a little last month. But until then, we saw the first part of the year going up, and we have now had 4 years where the index has been above 100, meaning that the growth rate of employment for small businesses has been growing and has been positive over the last 4 years. I think it's leveling out some, but I do think it's pretty positive, and there's certainly a need for the products for these small businesses, as you've said many times. They've got to outsource to be able to handle the regulations that are coming out now.
Well, that's why I always disclose that I am a client of yours, because I would have no idea how I would avoid the rules and the law if it weren't for Paychex. Thank you so much, Marty Music. Great to talk to you.
Thanks, Jim.
That's Marty. He's the president and CEO of Paychex. This stock's going higher, too. What can I say? Got it all together. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.